Hello and welcome everybody to today's very special training, The Secret to Trading Commodities in 2017, presented by myself, Phil Carr, at the Gold and Silver Club. During today's session, we will be covering live market analysis, a watch list of trading opportunities, a forecast of where gold, silver, oil prices are heading next, answering questions, and of course, we will be providing you with live support. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. For further information on the Gold and Silver Club and our expertise, please visit www.thegoldensilverclub.com. Now, the topic for today's session is the secret to trading commodities. And I will break it down for you today, really why you should be interested in commodities, what opportunities there are to take advantage of right now. As always, guys, any questions, any comments, any contributions, do please make sure you put those into the chat and we will go through those over the course of today's session. So why commodities and why now? So essentially, we've seen traders and investors continue to add to their positions on commodities over the last year, which has pushed commodity demand to the highest level since 2009. Commodities have outperformed equities, bonds, and all major currencies over the last 12 months. In fact, more money has poured into commodities over the last 12 months than any other asset class. Demand for commodities is at the strongest it has been since the financial crisis, and in the last 12 months, 51 billion has poured into commodities, whilst investors have pulled out more than 8 trillion from high-risk markets like Forex. If you have a look at my chart on the screen, you will see the amount of demand that we're seeing for precious metals, for agriculture, and energy is at the highest levels since 2009. So what does that tell us at the moment? Well, essentially, demand for commodities remains at record highs going into 2017. Data that tracks the movement of money around global markets shows traders continue to hold bullish positions across 20 commodities at levels not seen since 2010. And this is on strong expectation that commodities will continue to generate significant returns throughout 2017. So here's a closer look at how the commodity markets have performed so far this year. So if we have a look at the bigger picture and we have a look at how commodities have been performing in 2017, you will see here so far the top performing market and commodity of this year is silver. Silver is up 15% this year, followed by platinum, which is up 14.6%, palladium, which is up 14%, and gold, which is up 9%. So within the top 6 best performing markets in 2017, 4 of those are metals. And silver, most notably, has had the most significant gains. So essentially, we've seen a 15% increase in silver over the course of this year. And also, we've seen 9 consecutive weeks now on silver of higher highs, higher lows, and higher closes. It's been an impressive move. Gold just yesterday broke out to 3.5-month highs. We hit $1,263 per ounce, and we've seen palladium, platinum, also among the strongest performers so far this year. Now, of course, it's not only the metals, but the metals are tradable on binary, so you can trade gold, silver, platinum, and palladium. But we've also seen impressive moves on some of the soft markets here. So we've seen increasing inflows into corn, for example, wheat as well. We've also seen moves into other metals such as copper and lead over the last 9 weeks. So with that, what we'll do, we'll move over to where we are within the current cycle and what we expect next. So we've already seen over the first 2 months of 2017 some impressive gains on commodities, but how can you take advantage of this information? So what can you actually do to execute trades and possibly take advantage of the bull market that we're starting to move into? Now, we've definitely seen a switch of capital out of equities and Forex into commodities, which has signaled the start of a new long-term bullish cycle here. Now, back in the 1980s, when the cycle last had such a switch, we saw commodities returning a staggering 300% over a 10-year stretch. The current levels of bullish sentiment and record demand for commodities indicates we could be on the cusp of a similar switch right now that could potentially last for the next 10-year cycle. So basically, I will break it down for you. I'll show you where we are at the moment, what you can do to benefit from this moving forward. We'll have a look at the chart shortly, and as always, we will be taking any additional questions. So where are we in the current commodity cycle right now? If we have a look at the commodity index, last year was a year where we saw a positive gain on the commodity index. If we have a look at the overall chart here, you will see what we've been in a downward trend from 2008 through to 2016. And last year was, in fact, a positive gain for the commodity index, where we've seen a shift now out of a bear market transitioning into a bull market. And this year we've seen, again, impressive gains on commodities. Commodities are now at the bottom of the cycle, where inevitably it sets the stage for an explosive bull run over the longer term. A move from the bottom of this cycle back up to the top of the cycle would represent a 700% potential move to the upside. Why is it important to be aware of this? Well, essentially, commodities have come out of a bear market. They've been in a bear market going back to 2011. If you look at prices such as silver, which broke down from $49 US per ounce all the way back below $14 US, we've seen gold break down from its highs over 2011, where it came above 1,900 US per ounce, broke below 1,100 US per ounce. We've been in this downward trend and essentially a bear market going back to 2011. And what you often see is the bigger the bear market, the bigger the bull afterwards. It's a bit like pulling an elastic band. There's only if you stretch it significantly, the snapback that you get afterwards tends to be much more violent. And what you will see here in the overall bear market that we've been in, it has been the most significant in terms of its severity and also the amount of time that we've seen this bear market go on for as well. So it's been the second most significant bear market in history for commodities. And as such, at the moment, we are poised for a potentially large rally going forward this year. Now, other factors that support the case for commodities in 2017, of course, include Donald Trump and his presidency, which is fueling demand for commodities. Following on from President Donald Trump's inauguration on the 20th of January 2017, the global financial markets have now entered a prolonged period of uncertainty around how President Trump will govern. And since taking office, President Trump has signed aggressive executive orders to slash government regulations and drastically change U.S. trade, homeland security, and economic policies. His actions have already begun to have a major impact on the financial markets and have been boosting demand for commodities. Now, most notably, if we have a look at the price of gold, gold posted its biggest monthly gain since Brexit, surging 6% in January as President Donald Trump ordered a travel ban on citizens from 7 of the Muslim countries and fired the acting U.S. Attorney General for refusing to enforce the order. So with that, we saw over a 6% surge in gold prices in January. Now, at this point in time, gold is hovering around 9% up this year, but it had one of the biggest surges there over the month of January 2017. You can see that's the biggest move here we've seen in gold prices in quite some time. Now, if we go over and have a look at the overall picture here of other markets which have also had an impact from President Trump's overall inauguration, you can see that prices of crude oil have increased, copper has increased, iron ore has increased, commodities have gone on to post gains here at a record-setting pace. Since Trump's election victory in November 2016 to the inauguration day in January 2017, we've seen significant upside, and we expect that to continue. Other factors that support the case for commodities. We've got falling interest rates, so investors, they're earning less and less on their savings. We've got global currency devaluation. The British pound, for example, is currently at a 31-year low. The pound has lost 10% of its value since Brexit. It's forecast to fall another 15% in 2017. We've got extreme bouts of volatility in the global equity and currency markets. We have the upcoming European elections, post-Brexit uncertainty. So all of this really helps to play in the hands of the commodity markets. We could expect essentially more smart money to flow into these. So where is the smart money flowing at the moment? Of course, it is flowing into commodities. So just to break it down for you, in terms of the secret to really trading commodities in 2017, it's about having awareness of where we are within the cycle at the moment. You can see the top performing markets so far in 2017 have very clearly been the metals, silver leading the way, up 15% as of right now, platinum and palladium and gold as well, up 9%. So you can see the overall picture in 2017. We're seeing essentially capital flow into these markets. And what we've got coming up, which could really be a significant catalyst for additional moves, are the following. In March, we've got, and it's March tomorrow, 1st of March tomorrow, we have the following coming up. We have the Dutch elections, we have FOMC meeting, we have UK triggering Article 50, and essentially Brexit is beginning. So these already are going to be catalysts for potentially significant moves in commodities. In April, we have the French election. We also have the ECB meeting. In May, we have the OPEC meeting, which will, of course, affect oil significantly. In June, FOMC meeting, another ECB meeting. In July, Fed Chair Janet Yellen gives a semi-annual testimony. In August, we have the German elections. In September and October, more meetings from the Federal Reserve. And in November, Fed Chair Janet Yellen gives another semi-annual testimony. And then in December, we have the OPEC meeting and the final FOMC meeting of the year. These are all lucrative trading opportunities, which, of course, you want to have in your diary. You want to know when these scheduled events are ahead of time, because these can be big catalysts for the commodity markets and cause significant upside. So what we'll do, we'll have a look, we'll go over to the markets, and I'll talk you through some of the forecasts that we're looking at for gold, for silver, for platinum, for palladium, for oil. And essentially the way that we take advantage of these moves using the binary.com platform is via the following types of trades. So very simply, we look at a higher and lower type of trade. If you select higher, you win the payout if the market exit price is strictly higher than the entry price. If you select lower, you win the payout if the market exit price is strictly lower than the entry price. Now, essentially, when you're taking this sort of a trade, you want to bear in mind the following factors. So essentially, you want to pick the correct direction, so whether that is up or down for the market. You, of course, want to pick your entry correctly. You want to pick your timing of your execution. And then it's all about picking your eventual exit of the trade, whether you're looking to be in a trade for just a couple of hours, a day, or a week. If you get those three criteria right, your entry, your direction, and your timing in terms of the exit, that is what constitutes a profitable trade. Now, in terms of the risk reward on trades, it's very transparent. When you're taking a trade on binary.com, you can see here where your stake is visible there, so you know exactly what you are risking on the trade. You know what your payout is on the trade as well, and you get shown what your overall net profit would be on a position there. So you can see all of that when you go to take a trade, whether it's a higher or a lower trade. Your stake is very clear, your payout is very clear, and ultimately it's very transparent. So with that, guys, we'll go over to some technical analysis. I'll talk you through the charts. As always, any questions or comments, feel free to share those in the chat. I will bring you over. First of all, we'll have a look at the gold chart, and then we will draw your attention to palladium, platinum, silver, and also crude oil. So we'll just do a quick check-in that you can hear me okay once I share the screen here. Okay, great. So at the moment, we're currently showing the gold market. So just a clarification that you can see that okay would be ideal. Yep, fantastic. Thank you, Sharice. Okay, brilliant. So if we have a look at gold, a lot of you who join us for the weekly commodity corners on Friday will be very aware that we've been long gold now. We've been continuing to add to our bullish positions with staggered expiries on these trades. So essentially, we've been taking advantage of the additional breakouts. We've had buy positions on again since last week, where we've re-entered into the trade. And yesterday, we actually came up to the ultimate level, which we've been targeting now for some time, which was at 1,262 US dollars per ounce. This also matched up with a retest of the 200-day moving average, which you can see very clearly on my chart there, which is the red line on the chart. We had a pop up to that level. Gold currently right now is up 9% so far in 2017. And essentially, it's been a great opportunity over the last week to get into trades for the price to be higher. It's been a significant pop over the last few days since we broke out on Thursday last week, which was this breakout here to the upside when we had the surge, followed through also on Friday, and yesterday we had the breakout that we've been looking for. So you can already get a picture of some of the moves that we've had in commodities so far this year. So yesterday was a 3.5-month high here for gold. If we move over to silver, I'll show you this on, we'll go over to a daily chart here, and you can also see where silver has had a very strong move here over this year so far. In fact, if we go over to the weekly chart, you'll see here where we've now had 9 consecutive weeks of higher highs, higher lows, and higher closes. And so far this week, this will be the 10th week at this point in time that we've had a higher high, a higher low. We'll have to see how silver closes by the end of the week. What has been really interesting about this move is the linear fashion that silver has continued to progressively go higher on a daily basis here, very much in a regimented way here. So we've seen just very small moves on a day-to-day basis, slowly but steadily going higher here, creating higher highs, higher lows. We've only really had a significant retracement at the end of January, which then resulted in buyers coming right back in just above the 50-day moving average, driving the price higher. And again, we've just seen this slow and steady move, which is very different from how silver reacted over 2016, where silver, it would have these days where it would pop up within a couple of days. You get these large increases and surges in prices, and then suddenly you'd see silver give back those gains and a lot more as well, which resulted in these moves here that we saw following on from Brexit, these large surges, and then silver would give back the gains, surge, give back the gains, surge, sell off, surge, sell off, and each time we were creating lower swing highs and lower swing lows. But so far in 2017, silver is the best performing commodity this year, and it's going relatively unnoticed because we're not seeing these huge moves on a day-to-day basis. It's just been a very slow and steady move. Now, silver right now is trading at $18.41 per ounce. So it's definitely been a very solid move here, considering that we started the year just above 15 US dollars per ounce. So that's been quite an impressive move, obviously up over 15% so far this year. Other markets which have also had solid gains, of course, include palladium. And palladium, the level that I've got here at 795, represents the 18-month highs. We're not far off that at the moment. Palladium's about just over a $20 move away from the 18-month highs at the moment. This market has also had some significant gains over 2017, and each pullback has essentially been treated as a buying opportunity. You can draw your trend channels on this market, and you can see where very clearly we've got a lot of underlying support, and pullbacks have still been treated as buying opportunities here. And also, if we move it over to platinum, you'll see platinum just yesterday again broke out to the highest levels since September last year. We created a rejection candle into the close, but already today we've already had a retracement back up again. And you can see overall the picture of platinum, also one of the best performing commodities over this year. So essentially, for those of you who join us on the weekly Commodities Corner on Friday, where we go through our analysis, we talk through the markets, what we have been anticipating since the start of the year, the moves that we've seen on the metals, gold, silver, platinum, palladium, has really played out as to what we forecast. We were expecting significant upside on these markets. Gold has just come up and hit one of our key profit targets just yesterday, and we've hit our expiry on several trades over this week as well. And it's been a solid move so far. The big question will be, how are the prices going to progress as we go forward into March, and how are they going to progress as we go into April and also May? Now, Donald Trump is due to be speaking and giving a press conference tonight, and that will be important. It's going to be taking place at 9 o'clock Eastern Standard Time, which is essentially at 2 o'clock in the morning for us here in the UK, GMT. That is expected to create more volatility. There's a lot of uncertainty around Donald Trump, his executive orders, and so far this year that has benefited a lot of commodities, most notably the precious metals. This uncertainty, we've seen safe havens get treated as they should be, really. Gold and silver getting bid back up on the back of uncertainty. We had one of the biggest months on gold for several years, with a 6% gain over January. So we have Donald Trump speaking tonight, and we also have coming up over the month of March, Brexit, so more uncertainty again. We've got the Dutch elections, and then as we go into April and May, we have the French elections. So essentially, there's a lot of uncertainty in the market, and typically when there's uncertainty, traders do flock into commodities. But I will add, there is a caveat to that, in that you need to know what you're doing in terms of overbought and oversold conditions. What do I mean by that? So essentially what you want to do is you don't want to be just buying gold at any price or buying silver at any price. And typically when a market goes up very fast like this, the gains that we've seen so far in several of the metals, you also want to take advantage of the subsequent corrections, the pullbacks, and the selling opportunities which will occur likely over the spring. So we are getting into short-term overbought conditions, and a good example of that at the moment would be if we go over to oil. So if we have a look at the oil market, we've discussed this as well during the commodity corners, where we've been anticipating a breakdown in price. And today's actually been quite interesting because oil has continued to consolidate now for quite a long duration of time. We've seen oil consolidate and move sideways since December here. So essentially 3 months, oil has been stuck in quite a tight range, and it's had, over the last week, 3 attempted breakouts above its key level of resistance. Each time sellers have come back in, they've sold rallies, and oil has not been able to close above a key resistance zone here. That is most notable on the weekly chart at the moment, where you can see on a closing basis, oil has not been able to close above a key level of resistance, sitting just above $54.65 per barrel here. We've continued to see tests of that zone, but ultimately we're closing back underneath that level of resistance. And today actually is quite an important day because we've actually broken below the 50-day moving average. We've cracked below a lower trend channel here as well, and we're looking relatively bearish at the moment. We've still got a few hours into the close today, but we've had a few inverse hammers and rejection candles that have formed over the last week and a half, and we're starting to see oil break down. So what trading opportunities are we looking at the moment? Well, essentially, I'm looking for a sell-off in oil. I'm looking for weakness in this market. Oil has also been a very strong performer over the last quarter. If you consider before the OPEC meetings, oil was trading around $42 per barrel, and it's about $10 above that level at the moment, 3 months later. Also, if you consider where oil was last year, at this time last year, oil was sitting around $26 per barrel, and we're currently sitting at 53. So we've seen a doubling in oil prices over the last 12 months, which is a very impressive gain. That's a 100% move from this time last year. But we are in a short-term overbought condition. The fact that oil has not been able to follow through, has not been able to break above its resistance level, and the overall oversupply that we've still got in this market would lead me to look at sell short opportunities here. So I am looking to take on additional positions for a sell short, and essentially if we do get a close below $53 per barrel, if we can close back below that level, we'll be looking to add to our sell shorts on this market. Overall, oil starting to roll over, looks ready for a breakdown now. We'll see how this moves into the close. It's had several failed attempts to break out, and it looks to be on the verge now, on the cusp of a potential breakdown in price. So I would highlight to you one of the top trade opportunities at the moment would certainly be oil, and we're looking for weakness in this market, and we're looking for pressure to the downside. We're looking to take advantage of price to be lower, trades via binary, and looking essentially for the price to close lower and continue to come down over the course of this week if we can take out support and close below $53 per barrel. Now, in terms of gold and silver, the overall positioning of both of these markets right now, especially on gold, is at quite a critical level. Now, gold does need to hold above 1,250 US dollars per ounce in the short term in order to consolidate around this level for a move higher back towards 1,280 US dollars and potentially 1,300 as well. In part, that will be dependent on Donald Trump's announcement overnight as well. There's a lot of expectation on this as to whether he's going to cause strength on the US dollar. If we do see a rally on the US dollar, if the US dollar surges over his policies and comments today, we could see a potential pullback in commodities, which would give us a good opportunity to reverse position and go for a sell short. However, if Trump's comments tonight cause US dollar weakness, depending again on what he says over the press conference. You know for a fact, for those of you who watch his press conferences, that it's very difficult to predict what Donald Trump is going to say. If something comes out which is perceived as weak for the US economy or weak for the dollar, that could cause a further surge and breakout for gold. So we're at an interesting time at the moment. Essentially, we've hit our profit target, the level that we've been looking at for gold here for quite some time. We've come up to that level, and we're watching now for the next trading opportunity on this market. But where we're sat at this point in time could lead to significant movement here. We'll be reviewing that again on Friday's Commodities Corner, but short term, there's certainly a good opportunity here for oil, for a breakdown in price is what we are looking at this point in time. With that, guys, what I'll do, I will go over and just bring your attention to also the top trades that we've had over the last week at the Gold and Silver Club, our portfolio performance, so our trading performance update using our exclusive research-driven strategies. Now, top trades over the last week have included selling essentially into rallies on oil. So we sold again last week when we saw a retracement back up to resistance, entering at 56.25. Very simply, 4-hour time frame, looking for the price to close lower over the duration of the trade. We've also, of course, been in several gold breakout trades here, which a lot of you are aware of who follow us on a weekly basis on the Commodities Corner. We've now hit profit target on another one of our trades, which expired yesterday, for the price to be higher than 1,236 US dollars per ounce, and also our platinum trade for a buy at 1,001 US dollars per ounce has also hit the profit target and exited for a price to be higher for a rise trade. Okay, so that is just an example of some of the top trades that we have had over the last week. If you would like access to our live trade ideas shared with you, ready to implement, there is an opportunity for you to join us at the Gold and Silver Club. If you like the analysis today, if you enjoyed this, you can get this on a more regular basis. Join the week at the Gold and Silver Club. You can get access to all of our resources, our private members academy, to mentoring, our strategies, our online trainings, the exact trades that we are getting into. Whether you're a new trader, you just want to develop a solid understanding of the markets and fast track your results, or even if you are an experienced trader, but you really just want to take your trading to that next level, then the private members live trading room is definitely for you. To get exclusive access to our private members live trading room, you just need to go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. The private members live trading room includes the following. You get our trading strategies and our online training course. You get exclusive weekly live trading room webinars and recordings of each session. You get our live trade setups ready to implement, real-time notifications so you don't miss out on profitable trades. You get details of where to enter, exit on each setup, the inside track and a week ahead trading plan, and watch this for the week ahead. VIP support and mentoring directly from our senior traders, and you also get access to our Private Traders Academy website. So again, during the week, you get access to our live trading rooms. You also get all of our notifications via email and SMS sent out real time every time we are sending out one of our own trades that we are taking. You get commodity research and market insights. So we provide you with all of the research behind the trades that we are taking, as well as our weekly trading plan for the week ahead. So again, you get all of that by being a member of the Gold and Silver Club live trading room. And all you need to do, guys, is very simply go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. In that way, you will get exclusive access to the private members live trading room. What I'll do, guys, I'll put it in the link there. So if you do want to get in touch, you can do so today. All I would ask is if you can just mention when you're making an application that you have been on today's binary session, and that will make sure that you get me as your mentor, and I can help you really get all of your charts set up and coach you to trade commodities. Okay, so just put that you have seen this session via binary, and we can help you with that. Okay, so with that, guys, very much look forward to work with those of you who will be making an application to join us at the Gold and Silver Club. And of course, good trading, and we look forward to speak to you on the next one. Okay, take care, guys. All the best, and have a fantastic day. Thanks, everybody. Bye-bye.